We feel investors are really excited about Japan at the moment, and Japan certainly seems fashionable. We've seen a structural turnaround story over the last decade, which has really produced those high single-digit returns. And then on top of that, we've got the economic turnaround story, which is proving a real cyclical tailwind. Warren Buffett earlier in the year really did have a situation where he thought Japanese equities were trading at a really attractive price, especially when you look at that versus the prevailing interest rate. The real strategic case for Japan at the moment is the corporate scene has changed. We have a situation where back in the 80s, the market was full of market share chasing, high capex, low margin companies, and that model has now shifted. And now we're seeing corporates really focus on investor returns and capital efficiency. And with that, we've also got a lot of companies that are improving their share buybacks and also dividends. 50 years ago, the dividend yield for Japan's index was actually a lot lower versus the global average. And in 2021, we actually saw that reverse. And then if we take a step back and we look at the index returns over the last few decades, after the bubble peaked in the 80s, we saw 2 rallies in the 90s and also one in 2005. And this economic upswing was driven by policy stimulus or the China boom. Whereas the rally post-2008, after the crash, that really felt like it was driven by corporate fundamentals. So from the 2008 lows to the 2021 peak, we really saw a 10% annualized return over that period. So here, with this strong fundamental driver, and also the backdrop of Abenomics really driving that economic turnaround, we actually think that the positive drivers will still be there going forward. The key to the bull case is the changing attitudes of Japanese corporates with a greater focus on investor return and also capital efficiency. Now, corporate governance has been the critical factor here. So we're now seeing companies put that excess cash to work in order to improve their ROE. Now, how are they doing this? Well, first of all, we're seeing companies invest in research and development and human capital, i.e. inorganic and organic growth investment opportunities to really deliver that sustainable growth going forward. We're also seeing companies improve with share buybacks and also boosting their dividends. Over the last few years, share buybacks have actually tripled. And then last year alone, share buybacks were up 29%. And dividends are also reaching their all-time high. So we're seeing the doubling in dividends over the last decade. So what we're really seeing here is a positive trend where Japanese companies are giving their shareholders a higher return through that excess cash being deployed. And we think this is a positive momentum that is here to stay. So now we're seeing a situation where we've got this compounding of corporate activity in the background against a backdrop of inflation. And we think this is going to be a real positive driver going forward. I want to touch upon 5 unique selling points for our capability here at Columbia Threadneedle. Firstly, we set out to have a core investment style with our only significant bias towards quality. So we don't have a significant tilt towards growth or value. And we think that having this core approach where we're focusing on a high or improving return on invested capital, with that, we will naturally sometimes have a core or core growth tilt. And we think this is the best way to deliver that consistent performance throughout the market cycles. And that brings me on to my second point. With this, we've been able to add, on average, over 3% annualized returns since inception. And on top of that, we've never underperformed the benchmark more than 2 consecutive quarters. Now, I think this is a byproduct of our portfolio construction, which takes me into the third point. We're building a high conviction, concentrated portfolio across the market cap spectrum. So we're investing in companies on the large cap space, we're overweight versus the benchmark. In the smallest cap space, we're also overweight, and then we tend to be underweight the mid caps. The investment process is driven by fundamental research, and we enhance this fundamental research through our quantitative, ESG, and macro assessment framework. And in fact, I did some analysis on the strategy, and since inception, we've added over 70% of alpha through stock selection. So that really validates our approach as bottom-up stock pickers. And then finally, I just want to touch upon the team. We are a team of 5 portfolio managers here at Columbia Threadneedle, The team have an average experience of over 20 years between them. Lead portfolio manager Daisuke Nomoto has over 30 years experience. He is a Japanese native. He brings his understanding of corporate culture and language to his work. And on top of that, he's been the lead PM since the strategy launched back in 2012. And then just finally, no one has ever left the team. And we feel that gives a really strong backdrop for the repeatability and consistency of the investment process.